everyone, welcome. You have tuned into Market Cafe on ET Now. I'm Shrishti Sharma and with me is Priyanka, and let's talk markets then. And firstly, let's start with what the global cues we are getting from the world of equities, and starting from the Dow Jones. It was a weaker session coming in from the Wall Street yesterday because two of the retail giants have come out with their earnings. It was a major disappointment coming in from Walmart actually, and that played heavy on the sentiment of the markets as well. If we talk about the benchmark indices, then yes, Dow Jones was down over 450 odd points. Even S&P 500 was off the day's highest point. And when we talk about some of the macro data as well, we have been tracking that initial jobless data that was seen to be witnessing a mild increase versus the estimates, and the dollar has actually felt the kind of jitters from the tariff concerns is what we have been witnessing. Onto the commodity front, the oil prices were seen to be notching higher for the third straight gain. Other than that, we have seen quite a movement on the commodity in the gold prices as well, because gold scales to the 10th record high this particular year. In terms of the global cues, yes, we have been watching out for some of the macro data for today. Japan CPI number will be the key to watch out for. So that's about the global markets. Definitely a lot of cues that we have been watching out for. But yesterday it was a day of weakness. Let's see how the emerging markets will actually react to, because for now what we are getting to know from the GIFT Nifty is not much of an excitement there. But let's see how the days pan out.
All right. Good morning, Srishti. Of course, crude, the kind of move, maybe the more set of cues could come from Japanese market, where the inflation rate has reached 2 years high of 4%. But then crude prices, that one notched for the third straight day of gains. If you look at the prices, in fact, the future, that one also settled a little higher. Bond yield at the same time were a little unchanged. If you look at crude futures, that rose by 44 cents, nearly by 0.58% to close at $76.48 per barrel mark. As well as West Texas crude, that one was up by 32 cents. So little movement what we saw in oil. Bond yield was slightly unchanged, but then equity markets, US markets fell badly less, and they're on a pace for a modest set of gains only, modest set of weekly gains only. But then let's get you what are the key events to watch out for this particular day. There are a lot of economic data which has to come in from US markets, especially data from the latest purchasing PMI data which has to come in. In fact, the home sales data which has to come in. Back home in India, we have HSBC Manufacturing and Services PMI on top. For US, we have S&P Global Manufacturing Service PMI. For UK, also S&P Global Manufacturing and Services PMI is on the tab. From Eurozone, there is a crucial data which has to come in from HOCB PMI data, as well as from Japan. What we saw was that inflation was reaching 2 years high of 4%. That means it could signal another set of rate high from BOJ. We'll have to wait and watch. So broader set of cues will come in from the Asian market today.
Well, certainly, Priyanka, and Japanese CPI will be the key to watch out for, because as we have been seeing, Japan inflation has climbed to 4% on an annualized basis. Now, they have been hitting its highest since January last year, and the inflation print, of course, strengthens the case for further rate hikes from the BOJ. Now, meanwhile, core inflation rose to 3.2%, the highest since June of 2023. But remember, in December, the inflation rate came in at 3.6%, and that has continued to stay above the BOJ's 2% target for 34 straight months now.
All right, on to now some global stories. The stock that fed the sell-off on Wall Street, global retail giant Amazon, that has dethroned Walmart in quarterly revenue for the first time ever. Now, earlier this month, Amazon said that it generated $187 billion in revenues during the quarter versus Walmart's $180 billion top-line print. Now, Walmart has, of course, held the top spot in revenue generation since the time of 2012, and a title it gained overtaking oil giant ExxonMobil.
All right, with some of the other earnings then Chinese titan Alibaba posted a sharp profit hike in December quarter amid the strength in its cloud intelligence unit and e-commerce segment. Now, beat on both top line and profits, Alibaba now eyes major AI investments as revenues rebound in the third quarter. Now, the company's stock has surged by around 50% on both the New York and Hong Kong exchanges in the year-to-date basis, and US-listed shares of the company jumped more than 8% post the results.
And now shifting focus to global automakers, Mercedes has gone ahead and announced plans to cut costs, citing a challenging year ahead following declining sales in the year of 2024. Now, the company's CEO, Ola Kalninis, urges US President Donald Trump, who proposed 25% tariffs on auto imports, to consider Mercedes-Benz investments and contribution to the US economy. Now, the car maker now expects significantly lower earnings in 2025.
All right, but staying with the autos then, and Rivian has projected a surprise drop in its EV deliveries for the year, but it said it is expected to post a modest gross profit as it slashed raw material and supply chain cost in the drive for efficiency. Now remember, the Trump administration's new policies and potential tariffs threatened to boost the inflation just as it was dipping, and EV buyers may no longer get tax credit. That was a key support for the demand. Now, Rivian shares rose as much as 7% in extended trading before powering gains to trade up about 1%. And despite India's lofty green ambitions, EV penetration has stagnated in the country even as China shows the way in EV innovation. Now, experts believe it will be a long road for Indian players to catch up. But which players will lead this EV race? Let's listen into Horma Sorabji and Ronak Honkar.
We could see a jump in penetration from right now, which is about around 2.1%. I see it could even jump all the way to 4 to 5% because you've got so many players coming into the EV space. And I think the biggest casualty of that, of course, is Tata Motors. So I think the EV space is still very exciting because you've got a lot of mass market players coming into the market. We've seen the excitement Mahindra has created, the buzz they've created with their two new EVs, which they are launching they've launched this year. You've got Maruti coming in. You've got Hyundai with the Creta. So, yeah, I think the EV space is going to be the one that's growing. I think Tata's, I would say, would still continue to be market leaders, though their market share will come down dramatically.
As an investor in India, you have slightly better advantage for looking at incumbents. And the reason is simple, because we don't have the entire value chain of products that go into an EV that are coming from India. So we still depend on a lot of imports, from components to subsystems to batteries and all the other chips and everything. We rely a lot on the import. So slowly and steadily, the value chain, just like we have seen in the other auto ancillary value chain for the ICE vehicles scale in India over the past several decades, the same way it will happen in the EV. And it's a slow process. It need not be very fast.
All right, with this, we stay for a short break here. When we come back, we get you the Asian cues in detail and all the buzzing stocks that you need to keep track on so that we set you up for the trading day today. Don't go anywhere. Welcome back. You tune into Market Cafe on ET Now. This is Priyanka, and along with me is Srishti today. So Asia Pacific market mostly lower today. Now the kind of threat, Srishti, we knew that the Trump tariff threat, which is actually looming over the global market. Now it is coupled by Japan's inflation, the recent data which has come in. Now, with a 2-year high, inflation clinching to 4% mark, again signals that wouldn't this means that BOJ could take another rate cut? That's what is actually will need to watch out. But Nikkei looks like shrugged off this worry at this very moment. Nikkei is up by, though it opened with a cut of 0.5%, but now it has recovered to trade in a green mark with a gain of 0.33%. In fact, the broader market topics, that one also opened lower, but I think that one also has gained now. Kospi at the same time has intense the losses that it opened with. It opened with a minor cut now, but it is trading with a cut of more than 0.5% now. At the same time, if you look at ASX and even Hong Kong, futures were actually stronger earlier, but the Hang Seng is also strong right now. 1.8% kind of move coming on Hang Seng Index, and Shanghai on the flip side is marginally lower, trading with a negative bias, flat to negative. is what Shanghai is trading at the moment, and ASX is also lower. So mixed set of cues coming in. US markets were a weak set of cues. Asia is signaling a mixed kind of day from many of the economies trading in green, and of course many economies trading in red mark right now. And GIFT Nifty is implying us a cut of 76 points now.
All right, that's about the Asian markets. But onto the show today and onto ET Now today, which are the big voices that you will catch up. Let's find out that. First up at 9:20, watch the interesting conversation with Dinshaw Irani. We'll try to decode what's in for the Indian markets and how to play the current volatility. He's the CEO of Helios Mutual Fund. Other than that, 9:30, catch what's next for NBFCs, and we'll try to decode that with Viral Shah, who's the Vice President at IIFL Securities. We'll try to understand what are the growth triggers for the Mahanagar gas right now, because there's lots been playing in for the city gas distribution companies, and Anshul Singhal, who is the managing director of the company, will join us. We'll try to understand what's really happening in the real estate segment, and is this sector up for an upcycle? We'll try to know all of that, what's been building in from Anurag Group's Prashant Thakur, who is the head of research and advisory. And at 9:20, catch the conversation with Rahul Malani, research analyst at Mirae Asset Share Khan, on the discussion that can banks lead the rebound.
All right, so a lot on the tap today for the viewers. But then with this, we stay for a short break here. But before that, we... Welcome back. You're tuned into Market Cafe on ET Now. Now let's get you some more key stories. Walmart-led fintech app PhonePe announced it has begun preparations for an IPO as it plans to list on the stock exchanges soon. The company believes its strong top line as well as the bottom line growth across diversified verticals, its portfolio makes this a suitable time to prepare for a public listing now. Remember, in FY23 to 2024, its revenue surpassed the 5,000 crore mark, growing with a 74% increase Y-on-Y basis, while turning adjusted PAT positive. In fact, let's get you an exclusive story. Prakash Vedarshi did it. According to sources, the government is considering minority stake sale in 5-6 public sector enterprises in the space of infra, power and even defense. Prakash is here with more details on that.
Yes, we are learning from our sources that the government is planning to sell a minority stake in 5-6 PSUs trading FY26. We are given to understand that small stake sales through OFS route will be preferred for disinvestment in a given circumstances. In fact, market conditions will be kept in mind before announcing OFS for any CPSEs. Sources also suggesting that the focus will remain on generating fair value based on market conditions. However, sufficient gap between two OFS will be maintained to ensure better market response. OFS is likely to be launched for PSUs in sectors such as infrastructure, power, oil and gas, and defense. When it comes to strategic disinvestment during FY26, sources are informing that on one hand, government is moving ahead with the calibrated disinvestment strategy. On the other hand, focus is being provided on value generation, asset creation, and a listing of non-core assets of PSUs. So these are the two important strategies that the government is following. But the focus is being provided on IDBI Bank's disinvestment, and the government is making all possible efforts to complete this transaction during financial year 2026.
All right, so investors will closely watch the move which could possibly come on IDBI stock. Then thanks very much, Prakash, for all the exclusive detail on this piece of news. We stay for a short break here. When we come back, we get you all the buzzing stocks for the day today. Don't go anywhere. Welcome back. One of the most awaited IPO, NSDL IPO, may be launched by as soon as April this year, according to the sources. Ankur joins in with more details on that. Ankur, it's a much awaited, and they got an in-principle approval also, nor also in the month of September. Tell us more detailed view of that. Is it going to be a complete OFS? How big is the size going to be?
Yes, so the expectation is that the IPO may be launched within one to 2 months because there is a heavy deadline also for meeting the norms And as far as DRHP is concerned, yes, the papers were filed last year, that is in the month of September. And what company is trying to do is to expedite the process so that there is no regulatory lapse and the IPO can be launched within 1 to 2 months, which is the deadline for it. Now, as far as the size is concerned, we are given to understand that it may be around 3,000 crore. And it is important because the company has been trying for the stake dilutions of the stakeholders through this IPO. The stakes are of HDFC Bank, NSE, among others. And the 12-month deadline for DRHP is definitely expiring in September. However, it is MIA approval given by SEBI, which is prompting the depository to handling a bulk of India's dematerialized accounts to expedite the share sale process. So all in all, the expectation is that the IPO may be launched within 1 to 2 months as per sources.
Okay, within a month or two, it could be a 3,000 crore IPO, could be a OFS. Thanks very much, Ankur, for all that details on this particular piece of news, which has been a very awaited arrival in the markets. Thanks very much. Moving on, let's get you, in fact, a key check from the channel checks that what are they suggesting on the prices of the key consumption items. Jinay joins in with all the details. A very interesting report has come in from JP Morgan also. Jinay, tell us the complete details.
Well, as we have noted by JP Morgan on India consumer, it's a monthly price checks. If you look at what they have noticed is a price hike been taken place, especially due to the persisting inflation in agri commodities such as edible oil, tea, coffee and cocoa. Apart from that, they have seen a low single digit to mid digit price hikes taking place in the HPC category and a medium to high single digit price hike when we talk about the food segment. Apart from that, the new product launches that have been witnessed, especially in the beverages and the beer segment just before the summer season. And if we talk about the BPC category, beauty and personal care, then the leading players are continuing to strengthen their mid to premium portfolio going forward as well with the new launches. And lastly, when we talk about the price hikes, they have seen a slight increase in domestic in discounting as well as especially in the e-grocers when you compare month-on-month basis, and the DMart that continues to maintain its price leadership.
All right, thanks very much for breaking that down in a category manner. Thanks very much, Jinay, for that detailed that has come in from the JP Morgan note now. Now, moving on, let's get you all the buzzing stock for the day today. Gaurav is here with a list of stocks. Gaurav, morning.
Well, yes, let's begin our list today with CIE Automotives because weak set of number is what we have seen for Q3 for this company. Revenue declined almost by 5%, although we saw net profit increasing almost by 9%, but when we look at EBITDA margin, we saw a compression of around 40 basis points. Other than that, Delta Corp is also going to be in focus because the company has now signed a deal. With this, they will be selling Delta Tech Gaming, which is also known as Adda 52, to Head Digital Works for around 491 crore rupees. They will be selling around 51% stake to the company. Other than that, Cipla is also going to be in focus, and there are two news flows for the company. The first is that company has now received US FDA approval for the drug application which they had submitted, and they will be selling this drug in the US market. On the other hand, US FDA also concluded their inspection at one of their facilities situated in Navi Mumbai, and they have concluded with 2 observations under Form 483. So definitely watching out on what happens in Cipla today. Narayana Hrudayalaya is also going to be in focus because Chief Minister of West Bengal, Srimati Mamata Banerjee, has now led the foundation stone for their new hospital, which will be known as Narayana Health City in Calcutta. Now, as per reports, Narayana Hrudayalaya will be spending around 900 crore rupees in the first phase of this investment. ITI is also going to be in focus today because company will be transferring around 22 acres of land in Bangalore to CDOT for 200 crore rupees. Let's not forget that this deal was set at around 100 crore rupees, and the remaining amount due, which will be sent to the company after statutory formalities. Lastly, we will also focus on Vedanta because Vedanta is seeking expression of interest for building and operating around 5,000 megawatt of captive nuclear power plant in India. So definitely all these newsmakers will be in focus today and see how they perform in a trade today.
Okay, all right. Those are the stocks that could be buzzing in trade today. Largely, the earnings season is over. Now, the news flow continues on the basis that stocks would be on the move. But a very interesting note has come in from CLSA on their emerging market strategy. Gaurav, do tell us about that also.
CLSA, what they are saying is that basically when we look at dollar, we have already seen that the dollar has been strengthening, and now CLSA is saying that the temporary weakening of dollar is actually positive for emerging market. Why they are saying is that when we look at the trend, long-term association between US net savings and the dollar, if we compare these numbers, dollar seems 30% overvalued as per CLSA. On the other hand, what they are saying is that Trump wants dollar to be weak, but all the reforms that he has been taking is pushing the dollar to the strengthening side, which is actually a contra bet which he is playing right now. Other than that, what he's also saying is that the GDP differential for the USA is now around 12%, saving rate differential is around 30%, and wildcard still remains as more aggressive tariffs and geopolitical risks that we are seeing overall unwinding in the global market. What he's also saying is that when we look at the dollar is going to be at a most critical point in terms of global mandates and also for emerging markets. So definitely a very interesting note coming up from emerging markets point of view from CLSA. And on back of this, we will be watching out on how the dollar moves from here on, how Trump's all the reforms will actually impact dollar as well as emerging markets in coming days.
Absolutely. In fact, dollar is the one that is creating jitter for the globally all the economies. Thanks very much, Gaurav, for that breakdown on that note. But moving on, let's get you the data from the FNO snapshot now. Ansh is joining us. Ansh, what we have seen is that 23,000 is a clear, good resistance. The calls, the strikes have been sold into from many days. Though there was some action in the mid-cap index futures, and that's what we saw, that move came in and resulted in some point of recovery in both SMID. But now, what is the current action that FIs have done yesterday's trade?
Well, that's right. All the action is in mid-cap and small-cap space only, Priyanka, because if you talk about Nifty, then from last 3 consecutive sessions, Nifty has been closing around its flat level only. Also, if you see on chart, then in fact, it has been consolidating from last 7 consecutive sessions, having a very strong support base around that 22,800 mark. Also, on option front, we are seeing very active put writing has been happening at that very 28,800 mark, indicating some good support. Whereas on upside, we are seeing call writing happening at that psychological level of 23,000, followed by 23,200, indicating strong resistance on this level on upside. Now, if you talk about Nifty Bank, then here also the nature and the movement are same as that of Nifty, because here also we are seeing consolidation. In the previous session, Nifty Bank closed in red, but it closed within its previous session range only, indicating a neutral stance. Also on chart, if you'll see, then here also we are seeing that it has been consolidating from last 7 consecutive sessions, having a very strong support base around that 48,800, 48,700 mark, and this has been the support base from the last week of Jan itself. In index future, we are seeing some open interest going down by around 0.1%, indicating mild long unwinding, which is a bit of negative sign, but not a strong one. Now, if we talk about index future positions, then FII in the previous session has actually net sold around 6,600 contract, due to which the total long position has gone down from 16.3% to 15.6%. At the same time, if we talk about retail, then they have actually added position by around 2,900, due to which the total long position has inched higher from 70.4% to 70.7%. So in the previous session, FI seems to be getting a bit bearish, and retail seems to be adding some long position in the market.
Looks like a status quo only. Then FIs have a they have a range of longs on the index future, which is within 17%, but then retail has been strong. They've been holding the ground. Let's see how today's session pans out. But moving on, let's hear it from the top market voices. What do they think, that where is the G Street heading onwards amid the intense correction which we have seen in small and mid-cap space? Listen in.
If you are lucky enough to have cash at this moment, of course, you can deploy cash when the markets fall, but most of the time investors don't have, because your portfolio has also gone down. But this is a time when you should make sure that even if you're in loss making, try to build the right portfolio for the future. Forget about what mistakes you have done in the past. This is a time to sort of realign your portfolio for the future.
One of the disappointments we have seen is also in the construction, the cap goods, maybe some of the railway defense names also, because the orders did not flow through as expected. So and this was some of the hottest sectors to kind of to bet on for the longer term. They still are in the long term. Growth story is intact, but over 6 months when there were very few orders coming in, probably we are seeing earnings getting postponed rather than downgraded forever. So that's one of the big reasons. But going forward, it does look like at the Nifty level, 10% earnings growth for the next couple of years is quite perfectly doable.
In terms of market sentiment, it's pretty weak. So it's something which has historically always led to some kind of a pullback. And I would suspect that there could be one coming. I do not know, and the tough part will be, is this something which is going to be powerful enough to take to new highs? I think that's a more difficult call to take. However, from our perspective, the way we look at things, a short-term rally is something which should be our base case right now. In fact, if you were to gun to my head, if I had to choose one, I would say maybe a rally, but not really going to all-time highs, and then maybe more range-bound or corrective action.
So interestingly, we have started getting incoming on India from long-only investors, and most of them are the sticky investor side, like pensions and insurances of the world. Kind of the value has emerged, which broad index is still not showing you, but at a single stocks level, sector level, it has becoming quite attractive enough. That's where foreign investors have started questioning. Maybe we are a few weeks or a month away where markets will find its trough, and even foreign investors will start looking market back again. The pivot or tilt that has made on the consumption side, that will again get the belief of foreign investor back that India is again supporting the consumption story. Knowing that into account, once the dust settles, people will make a comeback again in the same old spaces like financials, IT, and your consumer. Large cap as a bucket, you will see, is more biased, or you can say more heavyweights on this particular three sector.
All right. In fact, let's get you more deeper view. Time now for the big call from the big market veteran, Manish Shokhani. The sectors he likes in this market and the themes he wants to steer clear of. Hear it out from the man himself, Manish Shokhani of Enam Holdings.
The good which has become cheap, which we've spoken for some time, has been financials. And while last year we went and participated a lot over the last 2 or 3 years in capital market type financials, I think the time to come back to not only NBFCs but also some of the private sector banks which hadn't performed for some time. Like you would have seen, even in this kind of big sell-off, it's the erstwhile favorites HDFC, Kotak, and Bajaj Finance which have come back. Whereas in the 2-3 years prior, we had leaned very heavily into public sector banks, for example, because of just how cheap they were. So while that trade is realigning back to the better quality, better run financials, on the smaller ones which are going to become large, I think the market has got a bit overexcited with all the new themes which have come out. And I called out, I think, including in your show, even things like Zomato and all, which are absolutely great companies, that the market's paying too high a price too early for the potential which is there. And I remember I pointed out the example of Infosys peaking in 2001 at a $45 billion market cap. And it's only basically doubled over the last 20 odd years. So while the company and the business can do well, valuation is really what you have to be very cognizant of. And for whatever small thing, even I tend to buy things, and I'll give you a number which I always use in my head, that however great the business is or however great the potential is, can I foresee that this company is on a 5 multiple 5 years forward? Because that allows me to think about the business 5 years out. It allows me to see what I expect the multiple of that business to be 5 years out. If I get it wrong, assuming I bought a decent type business, I'll at least end up at a 15 type multiple, which means I'll triple in 5 years. And if I'm lucky, I'll get to a 25 multiple, which means I'll make 5 times in 5 years. And I don't think those sorts of opportunities as yet exist in our market. So I'm patient with the amount of cash which I was fortunate to create. And I'm sure I'll get a chance to deploy over the coming months.
So one is banks and financials, Manish, but I think the bigger question that everyone is now also pondering about is what to avoid. When the market does come out of this abyss, are you going to see newer sectors emerge as leaders, and what will continue to remain underperformers?
The fact is that the market is going to consolidate into the better and better and better well-run financials. So I don't think people have as yet realized, the mega theme which is playing out in financials, because we got sidetracked by the fact that 3-4 of these good companies went nowhere for 4 years. But the time, I think, for leadership to re-emerge back with the well-run financials is very much here. The capital market leaders will continue to do well, but this 25-30% type compounding in AUMs, it's a cycle. So, when the markets will correct, people will go back to, banks, and, maybe 2, 3 years later, they'll come back to capital market stocks and so on. But it's within this overarching theme, I don't think people as yet have enough financials in their portfolio, because largely it's been sold down by the foreign investors looking at what's been happening to interest rates in America. And if and when that money does come back, which I think is a matter of time, the biggest beneficiary of inflows in India is going to be financials. So I can't stress that enough. It is the cheapest and the best sector to own in India, and a beneficiary of all the trends which are coming, including artificial intelligence.
Before Diwali, there was, I won't use the word sugar rush or gold rush, I would use the word mad rush. Because there was a mad rush in AI-dominated companies. There was a mad rush in manufacturing. There was a mad rush in solar, wind, clean and green. So let's take these themes one by one. Who will be the eventual winner of AI 3 years out?
In AI, I think of it the way it happened with the internet, that we are not really players in the making of the AI, just like we were not makers of the internet, but we were big beneficiaries of it. And as an example, like in internet, what happened is that people who were using the internet, for example, I was running a brokerage and an investment bank at that time, and it made my distribution cost to go global basically negligible. And that gave a big fillip to our business over there. The same thing I think happens with AI, that this entire middle layer of management, which is taking data from the bottom of the pyramid and transferring it to the top of the pyramid, the entire middle layer of a lot of companies can vanish. And that's why I say, for example, one of the biggest employers in our country is the service sector, where the entire middle management layer of financials, of even the IT companies, will tend to actually get obsolete, and just make these companies a lot more efficient. If you turn, for example, to the second theme which you talked about in terms of renewable, I do think that's a very, very long-term, powerful theme which is still running. Valuations in some cases are not sustainable, but the theme itself is very, very powerful. That we will have to invest a lot more into our own energy security, and whether it's wind or it's solar or it's nuclear, anyone who's playing into that, including the transmission players, there's very, very long room, for years ahead, for money to be made over there.
Second is clean, lean. I'm talking about this entire, excitement which happened in solar companies, wind companies. Is there merit in betting on energy transition? Because that's one big theme which is very popular with a lot of savvy market investors. What is your understanding, and where is that theme headed?
No, it is. It is a very, very powerful mega theme, and we have to create hundreds of gigawatts of power over there. And it's not going to happen with the traditional power. And as our country progresses, there will be a J curve of energy consumption, because as you get richer, you don't just go and buy a car, and you don't just go and buy a mobile phone. You end up consuming a lot of energy as well. And we haven't invested in energy really after the blow up of 2007-8, when all these power companies went downhill. So that power shortage in India and the demand for power in India is a long-term trend. And within that you want to be a lot more green and clean is something inevitable.
The big transition, and I'm talking about mega trends here, just for the benefit of our viewers, I'm simplifying it further and further. One big trend is energy. Second big trend is AI. Third big trend is digitization of the economy and platform companies. The fourth trend, and which in a sense everybody is now talking about very openly, is EV versus ICE. Who will survive? Will it be the incumbents? Will it be the challengers? Will it be back to the ICE companies, or it will be EV all the way?
Nikunj, I don't think anyone has the answer, because India may not yet have built out the EV infrastructure. So the early adopters, will buy it. Like my own son is one of those. But it may be this country goes the route of hybrid, because then the car just starts off on your ICE engine, and then that itself powers your EV, and you don't have to be dependent on going and charging somewhere. So we don't know how this game plays out, which is why everyone is trying to sell all the basket of products in their portfolio. The Indian companies have, like Mahindra and all, have responded really well to it. I'm not so sure on the offerings of some of the others, including the leader like Maruti. I'm not so sure what products they will bring out. And there is certainly room for this market to be overturned, the way we've seen it happening, for example, very recently in the paints market. Also, the government seems to be in a mood to allow the Teslas and the BYDs to come into India, and their products are materially superior to what we are seeing, in the Indian market. So how that game plays out, what the tariffs will be, only time will tell. It's a space I would not venture in at all because there's no predictability. And I certainly can't look 5 years out and say what the earnings will be over there. But the others which you mentioned, which would be about energy, which would be about beneficiaries of AI, there the winners look far more clear to me. And you don't, like I said, you don't have to win every battle. You need to buy 10 or 15 stocks to make your portfolio, and one is happy doing that.
All right, quite an interesting conversation. 14 to 15 components in your portfolio and more pain in small and mid cap. That this is what the main crux coming in, and earnings could be, Manish Shokani see double-digit earning growth in nominal terms. Interesting conversation. You can watch the entire conversation on our YouTube handles also. But moving on to some news fatafat, the US Senate has approved Indian origin Kash Patel as the new director of FBI. He is Donald Trump's pick to lead the country's top law enforcement agency. In a tight contest, Patel was confirmed by the Senate in a 51 to 49 vote. Meanwhile, during his Senate confirmation hearing, Patel assured that FBI would operate without political bias and ruled out any retaliatory measures. Brazil's Supreme Court has ordered X to pay $1.4 million in fines for failing to comply with judicial orders. The decision stems from a legal process last year in which the court ordered X to take down a profile it determined had spread misinformation as well as provide registration data for the user, while X has not commented on it yet. Moving on to Delhi cabinet updates. The Delhi government under BJP hits the ground running. In its first cabinet meeting, CM Rekha Gupta decides to implement centre's Ayushman Bharat scheme in the capital. 14 CAG reports that were pending will also be tabled in the assembly soon. And moving on to some cricket news, India kicked off the Champions Trophy 2025 with a win. India beat Bangladesh by 6 wickets with 21 balls left. Shubman Gill single-handedly takes India to an easy-looking win. After suffering with injury, Mohammad Shami made a comeback after 2023 World Cup and took 5 wickets. Now, the ICC Champions Trophy 2025 will hold its third match today with Afghanistan facing South Africa at Karachi's National Stadium. And on to some somber news. Congress leader Sonia Gandhi was admitted to hospital on Thursday morning due to a stomach-related issue. According to reports, her condition is currently stable and has been kept under observation. She's likely to be discharged though today. And with this, it's a wrap on this edition of Market Cafe. Looks like we are in for a soft start, but let's see if we are able to recover. It's the last day of the week also. Thanks so much for watching. Stay tuned to ET Now.